All right, so yes, I know it is the weekend, and I'm pretty sure I said I was not going to be on the charts, but I gotta take some notes. Okay, so that's why we're here. So basically, um, because I didn't add certain notes to my chart, I'm gonna go through. I was gonna write them down physically, but then I couldn't find a pen. For some reason, I have a notebook and no pen. What's the point of that? Okay. So I hold on, let me plug in my phone because oops, phone is dying. I'm on a strict no PUBG regimen because last time, what did I do? Oh yeah, I I've been playing PUBG a lot, mostly because I realized they have a home building section. And at first I thought it was stupid. I was like, who wants to, you go to play PUBG to, play Battle Royale, not to like, build a little house and chill out in your house. But now I'm actually spending like more time in my house than in actual PUBG matches. Not that it's important, but like, yeah. Anyways, so I'm on a no PUBG regimen, but my phone was almost dead because I was playing so much PUBG. Anyways, so um notes. So let's pull this up, okay? Yikes. This is what happened yesterday. I mean, yeah, this was yesterday. This was that break retest, but up pretty high. We only took like maybe two of those breaks. We took like maybe up to here. We didn't even take all of this, and that's okay, but you know, it was it was a weird one. We came all the way back into it though, but I don't really care about the coming back into it. It's about coming out of it. It's what the whole point was. Anyways, so let me go back, and this is where we need to go back, not over here, because that is gonna be not even right, so it doesn't even matter. We need to go back to Friday the 2nd, because that's when our first, why are we scrolling? Why don't we just use the navigation panel? Eh, okay, let's go back to the 2nd, and I just need to make note. Why did I? Okay, I don't know why I went back there. The 2nd, go to, here we go. Okay, so I just need to make note of these things because I still don't have a printer, and the longer I wait, um, I might not be able to come back this far anymore. So this is 170. So let's bring up our notes. So we have Friday, Jan 2, 2026 additional notes. Okay, so our PM range is 170. Let's look at our volume. Volume pre-market was in the 1 to 2,000s. CVD PM in the 1 to 2Ks. Okay. Then there was low interest. CVD decreased after, yes, so the CVD so after 15 min OR, low interest slash participation. I think let's just give it a sale. We have a 1.5 thousand. The lowest I'm seeing is 94.20. 1.5, 1.6. Okay, so submission, low participation. And until first break of PM low interest participation CVD 20 to I don't know, one, not really. I mean, I'd say 20 to like 700. Right before break, spike to, well, that's not how you spell spike. Spike to 2K. The participation increased right before that break, but all even here, the 15-minute, very low. Let's say 900s. Okay. So what we have, so let's read this. So Friday, January 2nd, 2026. These are our additional notes. Okay, so the pre-market range is 170. Our CVD pre-market in the 1 to 2,000s. It was in the 3, it was in the 4 and 5,000s. Um, mm, was 4 to 5Ks, then dropped near 7:30. Oops, 7:30 p.m. PM open. Okay, so basically I'm saying that we were in the 4 to 5,000s, and then right as we got to our first candle, we dropped into the ones, and then we just stayed very low, and then it stayed like that until we got an initial break. So actually, no, what was I saying? Hold on, I was looking at this. It stayed participation opening range low. That first break was okay. Let me fix this. Okay, 15-minute. Okay, let me do a couple of things. First of all, I want this. Okay, so PM range is this. CVD pre-market was this, was in the 4. Pre-market was in the 4 and 5,000s, then dropped near 7:30 pre-market open. 15-minute opening range 15 ORB. 15-minute ORB low. I'll say break of PM low did not result in significant participation increase as it did with 15 min ORB break. Okay, and that's the truth. I almost got those confused for a second. I was looking at this. That's when it was significant. This, not so much. Anyways, that was just Friday. Okay. Let's keep scrolling. Let's go all the way to... Was it a holiday? No, wait. Okay. Here we go. For some reason, this line isn't here. It should be right there. Let me redraw it. Okay, so this one. So pre-market, pre-market, it was in the 9. So, okay, so pre-market was in this between 6 and 10. I'm gonna say 6 and a, no wait, 6 and 10. Pretty sure I saw a 10. Okay, yeah, I did see 10. Okay, so pre-market, let's bring up our thing. Let's measure the range. Okay, so this is, what day is this? Monday? Okay. So Monday, Jan 5, 2026, additional notes. Okay, so let's measure this while we're here. So this one's about 353. 353. Okay, so here we go. Okay. CVD PM in 1 second. PM range is 353. Oops, 353. CVD PM in the 6-2. Did I say 11? Or was it 10? Ooh, I'm gonna say 10. I did not see. No, okay, 10. 6 to 10 Ks. Consistent with PPM, which was in the 9 to 10 Ks. Consistent with pre-PM, the pre-market, which was in 9 to 10 Ks. So there was a drop, but it still was hitting 10. Okay. Participation did not decrease. He stayed consistent in the 9 to 10s and 11 to 12s oops, after the rate of PM high and 15 min opening range. Okay. So there was nothing super significant. Oh yeah, this is where I traded, but I sold here and I should have waited. Okay. What was the other note? Yeah, so I'm trying to mark. Okay. So that's what happened. I'm trying to note what was going on down here because I won't be able to look back as precisely when I do if I have to wait. Okay, so now let's do Tuesday. I'm only doing it for the days that I didn't write good notes. Tuesday, Jan 6th, 2026. Ah, January 6th was 6 years ago. Crazy. Okay, now let's go here. Bum, 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 bum. Scroll, scroll. Okay, I don't know why the tops are missing from all. Okay, the bottom is missing from this one. 1 second. Is this one of those instances where it barely broke? Because I had that happen a couple times previously where it had barely broken and I was like about a 10, almost 10 break. The other ones were like 4 and 6 and I don't know, I didn't like it. Okay. So let's measure. We have 197, give or take. So we have 197 on the range. Let's write that down. Okay. Pup, how you doing over there, buddy? Okay. Range. What did I say it was? 197. Okay, so we have our PM range is 197. Now let's look at this. So pre-market, we're in like the, I don't know, 7 to 1,000s. Okay, so and then when we got into pre-market, we were in the 1 to 1 to 2. I'll say 1 to 2. Okay, CVD PM 1 to 2 Ks. Only slight increase. Whoa, increase from pre-market. I'll just say pre-PM, which was 1Ks. I mean, technically, this would have been a slight decrease, but anyways, okay. Then the CVD did what after? After save price broke quickly within 2-3 mins. I'll say broke pre-market high quickly within 2 mins. CVD increase to 2-3 fours, so 2 to 4 Ks. Okay, because then you have your this. I don't care about this unless it's overlapping with this. Okay, now we're gonna do, did I start taking better notes on Wednesday? Hopefully I did. Here's Wednesday. Okay. I didn't take better notes. I didn't know what was going on with the CVD. Okay, so Wednesday. Oh, and I also didn't measure. Okay. Yeah, I didn't start doing that till later. So we have 168. Yikes. Okay. Wednesday, Jan 7, 2026. 160. PM range. What did I say it was? 168. Okay. 168. All right. So what's our CVD? So pre-market CVD, pre-market CVD was in the 4, 3 to, I'll say 3 to 7s, almost 3 to 8s, 3 to high 7s. 3 PM was I'll say 4. It was basically 4 to 7 Ks. Pre-market was in the 7, 5. So 5 to 7s. PM CVD, PM CVD, 5 to 7 Ks. Yeah, it stayed pretty consistent. Stayed consistent even after break. Yeah, this is where I didn't enter because I didn't like the entry. I didn't like the pullback for some reason. I was like, oh, what if it pulls all the way back into here? It didn't, but that's what I was thinking, which is why I didn't enter here. But yeah. There was a spike after the pullback though. That happened. Spike after pullback. Okay. Anyways, doesn't matter. So that's basically what we got for this one. And then this one, I think I actually, yeah, this one was bad. It was bad, but still somehow worked. CVD in the 5 to 6 pre-market, and it was like 4 to 6. But it was the same, 5 to 6 during pre-market as well. Oh, and then make sure you say after the initial break, the price spike. No, it stayed about the same. And so this was your big break, pullback, continuation. What lovely. Anyways, and I took note of all of this. I'm not gonna write the fine, I'll write it down just because I can. Well, let's do it. Stay comes. Let's keep it uniform. Thursday. Why did I say 7-7? My 7 key is all messed up. Jan 8th, 2026. And then we have okay, so we're just noting what we didn't note, which is CVD stayed consistent 4 to 5 Ks 3 p.m. and 5 to 6 p.m. Pop, how you doing, buddy? He's frantically chewing on his bone, and I mean frantically. Okay. Yeah, volume trickled off after the final break, after all that manipulation. I mean, if people were trying to trade here and they got all chopped up and manipulated, then when price did finally break and continue, people might have just was like, I'm done, stop trading. And then they were like, aha, I'll pull back. And some people got in, and then they were like, nah. Anyways, okay, so now let's go to Friday, which was yesterday. Whoop. This was a big one. So we already noted the range. We noted low pre-market participation, very low. Pre-market though, we didn't note. Pre-market, I don't really have a specific set that I go back. I just kind of look like that, like what happened initially, like within like an hour to an hour and a half. I don't go all the way back until like 4 o'clock in the morning. So pre-market, we were getting about 1 to 2 thousands, and then news hit, and then nobody was in the market anymore. Everybody just stopped trading. So I'm gonna make a note of that, because I did not on Friday. Friday. Jan 9, 2026. CVD. We'll say 1 to 2 thousands, 1 to 2 Ks pre-market. Then after news, participation dropped significantly to 200 to 1 Ks. And then I already noted that volume was came back in after the break. Yeah. But yeah, I took better notes about the CVD here, but I didn't previously. So just noting that the CVD was in the 1 to 2 thousands pre-market. Then after the news happened, the news participation dropped significantly, like everybody stopped, and then it didn't pick back up until we broke the both the PM range high and 15 orb high. So yeah, anyways, that's what we have. I'm going to do like a soft kind of, not a test, but I'm gonna read this back to ChatGPT, see if it comes up with any, um, if it has anything interesting to say regarding this data. And yes, it's only 1 week of stuff, but let's see what it has to say. All right, we're gonna wait and see if chat actually can transcribe this. All of my conversations, every single one, it says, "Oh, your conversation is too long. Please start another one." Like, what? Anyways, it's annoying. Add to project. I'm creating a new project. New project. Trading. Okay. Yeah. Literally every conversation I've opened, it says, "Oh, it's too long. It's too long." Anyways. Okay, so let's see what we have here. All right, I'm just gonna read it. So it says, okay, so this is actually really good observational work. What you've basically done without over quantifying yet is map participation behavior relative to location and structure, which is exactly how CVD is supposed to be used. I'll break this down in a clean way, in a clean narrative. Blah, blah, blah. I'm going to give you blah, blah. Okay, so number one, big picture. What the data is actually showing. Across these 6 days, the theme isn't CVD high, good, CVD low, bad. It is this. CVD only expands when the market is then act breaking levels that actually matter and the context supports continuation. When it doesn't, you get fake breaks, weak follow through, or delayed participation. So your data is really showing when participation is reactive versus proactive. Yes, the two main day types you captured: reactive participation days, Friday, Tuesday, and Friday. These all share a similar DNA. Pre-market CVD is low to moderate. Pre-market CVD is higher than fades. Price breaks a level before participation shows up. CVD expands after the break, not before. Okay. Well, let's look at this day. CVD expands after the break, not before. It's true. It expanded after, not before. Okay. What this means, traders are not positioning early. Breaks happen on thin participation. Any move needs confirmation after the fact. Example, Friday, January 2nd, pre-market range 170, not huge. CVD drops into pre-market. Did it? Let me go back. I like numbers. Let's go back to the second. Okay. Okay, so it says CVD. So we're here, we're in the 5,000s, and then once we hit pre-market, we dropped, and we did drop significantly. So it drops into pre-market, and then the break of the pre-market low, which is here, did nothing. Actually, it broke within a couple of minutes. It did nothing. Only after the 15-minute opening range low breaks does CVD expand. So the translation, the market didn't care about pre-market levels. Participation only showed up once the real RTH structure broke. So it only showed up after this broke, right? That's where you start seeing some more participation. Because here, no, it broke this and it didn't really care. Not so much. It didn't really do anything. It really, you got like an increase, just a little bit, not a huge bump, but it didn't care about that level. Okay, type 2, proactive participation days. So first we had reactive, where we had to see a break, where basically we were high CVD, pre-market came along, we dropped, and people weren't positioning, and then we broke, and then people were like, okay, um yeah, this isn't that day. What is this? This is Monday. Oh, wait, no, what day? This is Friday. What? Okay, so the next day, so that was that, right? We had and then it dropped as we came into here, was low, kind of weak, and then it just kind of it picked up a little bit, but not a whole lot. Not until it really didn't pick up until we actually broke this because yeah. Anyways, okay, so number two, proactive participation. Monday the 5th, Wednesday the 7th, and January the 8th. These days look very different. CVD is elevated pre-market. It stays consistent into pre-market. Breaks of a key level don't need a kickstart. Participation is already there, so it's proactive. Pre-market range on Monday is pretty big, 353 ticks. CVD is already in the 6 to 10,000 range. Break of a pre-market high and 15-minute opening range. Smooth continuation. No major spike needed. Traders were already positioned. The break was just permission to continue. This is initiative behavior. So let's go to Monday and let's see that actually. Okay. So let's just see what it said. Okay. It was high the whole time, right? 10,000s, 9,000s. We did drop a little into 6, 7, 8, 9, 10. We start kicking it up. So once the open, we're still in the 9, 10. We hit that break and now we're in the 10 to 12s. That was just like a permission to continue. We were already high volume. We never really dropped off. So did I say the translation? Yes, traders were already positioned. The break was just permission to continue. So that was a proactive day. Okay. That was Monday. They also said Wednesday. Let's look at Wednesday. Where this isn't Wednesday. Oh, yes, it is. Okay. This is Wednesday. So here, pre-market, we're in the 3 to 4s. The 6, we're building 6, 7, 6, 7, 5, 6, 7. It never really changed that much. We had a break and we had a little spike up to 8, 7, but it was around the same. It never really stopped to look back. Yes, there was more chop, as you can see, way more chop happening on these high days, just like the other day. But once it broke, it continued, not for very long. It did completely reverse, but yeah, it just broke cleanly and went. So okay, number 3, the role of range. This is subtle but important. So you accidentally uncovered something really useful. Did I? Okay, smaller pre-market ranges, 160 to 200 ticks. CVD tends to be more sensitive. Breaks need confirmation. Participation often comes after the level breaks. What? Okay, participation often comes after the level breaks on low range. Well, this is a low range. This was a very, what kind of range was this? Let's measure it. I guess I could go back and look, but like, nah, this one was pretty small. And this one was a consistent one as well. Larger pre-market ranges, 300 plus ticks. CVD tends to be more established earlier. Breaks are more acceptable. Not necessarily, because on Friday we had a very wide pre-market range of 300 and what was it, 393, but we dropped in the CVD dropped right after because that was a news day. News day, this is important but simple. This is number 4. This one is important but simple. Pre-market CVD plus okay, so this is okay. Pre-market CVD is 1 to 2,000. News hits, participation drops, CVD collapses instead of expanding. Traders stepped back, liquidity dried up. Any move is suspect unless participation returns after the event. This is risk-off behavior, not directional intent. Interesting. Okay, so then they broke it down for me. Okay, so what I'm noticing is that CVD doesn't matter by itself. It matters when it shows up. On some days, participation is already there before the market breaks a level, and those tend to be cleaner continuation days. On other days, the market breaks first and participation shows up after, which usually means more chop or fake moves early. If you want a punchy takeaway line, CVD is early, the move is usually real. CVD is late, the move has to prove itself. Interesting. Okay. What this might mean for your trading, soft, not rules. Okay, just context awareness. Low pre-market CVD plus early breaks, wait for post confirmation. High stable CVD before open breaks are more trustworthy. See, this is only data after 6 days. I can't write any sort of rules based off of this. I may, and actually not may, I will be doing a spreadsheet after I get all of my, because I need that log like 100 trades, which is going to take 5 months to do. But what I will do is I will create a list. I'll probably ask ChatGPT to, you know what, let's do that right now. Okay, so if I was going to be making a spreadsheet, because really I want to isolate A plus days, days where we have a nice clean break, clean pullback, clean continuation without all of the chop and the nonsense. Okay, I want an A plus day. I want to isolate A plus days. So, or or not even just isolate A plus days, but I want to remove like D minus days, days where it's like, maybe, I don't know. So I'm not writing the sheet, the Google, not Google sheet, but the document sheet. I'm not gonna make that list right now, but just for general purposes to be thinking about it for when I do make a spreadsheet, because basically what I want to do is make a spreadsheet and then have like AI interpret the data to isolate the A plus day from a ton of data. So, data points that I'd be looking at would be news. Is news on the day? Does it precede the day? Is it post? Is it a post news day? That's what I'd be looking at. Looking at the day of the week. Is it the beginning of the week? Is it the end of the week? Right? Because that matters as well. Um, who knows? Maybe every day of the week. Look at the day of the week. Uh, look at CVD as it relates to pre-market, um, and then is there increase of CVD right before a break, right after the break? I want to know these things. Um, also something to look at pre-market range. What is the range looking like? Um, you know, what if we break really early? What if the break happens within, 2, 3 minutes? What if the break happens within 2 or 3 minutes? What if there's an overlap with the 15-minute range and the pre-market high and low? So those are all things that I want to consider so that when I do my spreadsheet, I can fill in each one and then have AI quantify it into something as meaningful where we can isolate not a specific day that's A plus, but a specific set of conditions that create an A plus setup, but also a specific set of conditions that create the worst type of setups. That's what I want to see. Because technically, if I had followed my rule, because here's the thing, let's go back. Here's the thing, if I had followed, let's go back to Monday. Okay, so if I had followed my rule and not entered here and sold off the 21 moving average, like what the heck were you doing? Let's see, I got ahead of myself. I was not paying attention to this. But if I had actually been patient right here and waited for this, every single day was technically a winning day. That would have been 5 in a row. But I screwed myself by doing this because I didn't really have a hard set of rules. I was just kind of going in and like, okay, let's see what we can do. Yeah. So okay, let's see. Let's see what chat has to say. Okay. It says, "Yep, this is exactly the right way to think about it. You're really trying to isolate you're wait, what you're really trying to isolate isn't good trades, it's good environments. The trades are just a byproduct." Exactly. What's the environment that sets up the best trades? And also, what's the environment that sets up the worst trades, right? Because if we can avoid the worst ones and, maybe go in a little more on the best ones and then stay average on the average ones, you'll be doing pretty good. Okay, so um, let's say structure. Okay, I'll structure this in a way to help you think, in a way that helps you think now and later turns cleanly into a spreadsheet, so that you can do AI interpretation. Okay, so number one, reframe the goal. This is important. You're not actually trying to find A plus days. You're trying to systematically eliminate B minus environments and let A to A plus conditions self select. That's a huge mindset shift. If you remove low participation, conflicting structure, news induced distortion, structural overlap, chop, what's left almost has to be tradable. So I'm not trying to do exactly that. I'm not trying to remove low participation or remove news induced distortion, right? Because if you know there's news, right? If you know there's news, and news is approaching, maybe you're not entering on the first break that you see, right? Not because it's bad, but if there's news, maybe you want to stay out, or maybe there was news previously that day, and so you want to be in because now there's, more likely to be participation. You don't know. So I'm not saying I want to get rid of news or get rid of structural overlap. Like for example, when the 15-minute overlaps with the pre-market, I don't want to specifically get rid of that. But if I can say, when there's overlap, there tends to be more chop. So be wary of those days, right? Doesn't mean never trade them. Just be wary of them. It's just for we're looking at the environment. What's the environment that breeds the best trades and the environment that breeds the worst trades? Like, no, think of a home environment. If you have a home where there's like drinking and there's domestic violence and there's all of this stuff that's going on, then what kind of children does come from a product of a home like that? Not saying that all of them are going to be bad, right? But chances are kids are going to end up in trouble, they're going to end up in jail, and they're going to continue the pattern. Statistically speaking, okay? Similar process if you have a family where the parents are doctors and they're lawyers and they're, engineers, and they all have high levels of education, and they go to church every Sunday. Chances are, not saying that every kid's gonna come out of that home, a big success. They could still end up in trouble, but the statistics are a lot lower. You know what I'm saying? So that's what I'm saying about the trades, is that you're not gonna get, it's not gonna be perfect every time. But if you can create an environment, like, and isolate the environment, in this environment, trades tend to come out more successful than in this environment. Trades tend to come out a little choppy and confusing and a mess, right? Same principle. Okay, so what did they say? Okay, number two, think in buckets, not indicators. For the spreadsheet, don't think data points, think buckets of behavior. You want each row each day to answer: was the market position, undecided, or distorted? Here are the buckets that matter. Bucket one, participation context. CVD behavior. This is your primary filter, not a confirmation. You want to log things like pre-market CVD, low, high, medium, pre-market CVD, lower than pre-pre, same, higher, timing of participation, before the break, at the break, after the break, or never meaningfully expanded. Interpretation, logic. This is key. Early plus stable participation. Early plus stable participation. Market already committed. Higher chance of clean continuation. Late participation. Reactive trading. Chop, fake breaks, or delayed trend. Failing participation into the open. D- environment unless something changes fast. Again, this is their interpretation. Um, you know, but that's just because like yesterday was a prime example of that. There was failing participation due to the news, and then nobody was trading. It was bad. But once we hit that break, all of a sudden, boom, volume came in. And the clean break, not the fake out breaks, the one clean break that you got, that was the best one. And that's where the participation, but the participation supported the move. It didn't precede the move. It supported after the fact, but it didn't precede it. Okay, so blah 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 blah. Okay, bucket two, structure clarity. This is where A plus days live quietly. You want to capture pre-market range size, small, medium, large, but more importantly, structural alignment. Is pre-market high near 15-minute opening range high, or high low respectively, or are they far apart? Why this matters: align levels, fewer decision points, clean breaks, clean pullbacks, separated levels, multiple liquidity grabs, chop. Why did it stall here? Days. So A plus days usually have confluence, not complexity. Interesting. Okay. Bucket three, timing of break. This one's sneaky but powerful. Break within the first 2 to 3 minutes. Break during opening range formation. Break after opening range is set. Interpretation. Immediate breaks plus no participation, often traps or stop runs. Breaks after opening range with participation present, acceptance, better continuation, odds. Did the market earn the move or rush it? That's a good question. Because like what happened? What day is this? Monday? Let's look at one of these days. Like this day, for example, we actually were stayed pretty consistent, and then right at the open we stayed pretty consistent. Nothing was drastic. We were in the 2000s, went from the 1.8s to the 2000s, nothing drastic, and it broke cleanly. Nice pullback, continuation. I mean, it was clean. So it wasn't a trap, so AI right now, it's trying to give me ideas. I don't want their ideas and thoughts of what it could mean. I want the hard, cold facts, and then I want to pull together, okay, what days were winning, what days were good, clean breaks, and what days, good clean breaks, and what was the environment that surrounded it. Because if we can choose the items in the environment, as you can choose like a home environment to place a child in, right? Then you're setting it up for success, right? If you say, okay, I'm about to place a child into this home, I'm going to make sure, let's say you could assemble the perfect little family, okay? Like, okay, in the perfect family, the dad has a good job, the mom has a good job, the house is big. I don't know. There's a dog, you know. They both have these values, good values, blah 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 blah. Like fill in the blanks, fill in the blanks. You could start assembling. Now, what if you started adding things to that home, like, you know, dad is addicted to prescription pills. Actually, mom is addicted to prescription pills. Dad hates his job. Uh, is having an affair with his secretary, start adding things to the mix, okay? Now, what do you have? You're starting to create a little bit of a chaotic home, probably. And then, are kids gonna thrive from that chaotic home? They might, but chances are it's gonna be tough on them. So, why would you want to assemble a home with obvious problems? So, I want to look at, okay, if we're pre-market news, like every day that precedes our big news day, a high impact news day, which is my 3-star news days, if every day that precedes a news day has chop and low participation, then that's a sign that maybe pre news days should be avoided, right? That I'm just not sitting down on pre news days. I'm removing that negative element in the trades environment, right? So, okay, continue. Bucket 5, day of the week bias, soft, not deterministic. This is not a rule, it's a weight log, day of the week. Later, AI can answer, do A plus environments cluster midweek? Do D minus environments cluster Fridays or Mondays? You know, technically on Friday and Monday, there were very clean days. Okay, so what will an A plus day likely look like in plain English? Um, and then they kind of write it out. I'm not gonna repeat it because they're just speculating. I say they, it is just speculating. Um, yeah, so it's not about take because before I saw a setup like, oh, there was a flip, there was a this and that, enter. But now I'm looking at, I'm really trying to hone in not just a filter based on an indicator and a color of a brick, but where's the structure? Where's the structure to this move? Because none of my moves had any momentum behind them and they kept failing, and I was like, why did these keep failing? So, so yeah, that is what we're doing, and we're just gonna keep gathering data until eventually, eventually, um, we'll be able to put something together that is all encompassing of 100 days, 100 trades. And some days might have more trades, but really it's gonna be on 100 days. So gonna keep doing this for 100 days. It's gonna take 5 months. I can't really imagine coming in here and streaming every single I can't really imagine coming in here and streaming every single day for 5 months, Monday through Friday and sometimes Saturday. Like it's a lot. It's a lot of work, but it's gonna be worth it. um Also, on a side note, when I previously was on YouTube, I loved to stream my profits and all of that. I'm trying to move past that. Trading is more than profits, especially when you have people like Apex who like to play games and don't want to actually pay you. Um, and so yeah, it's like I don't want to think about the money because the second I start thinking about the money, then I trade to preserve my account instead of trading because that's what I like to do. So, um, you know, there's a part of me in the back of my head that's like, oh, you could, spend the Saturday putting together a portfolio and you could make a whole video of all your trades you took this week. I could. Well, what's that gonna do? Mess with my head and make me think, oh no, if you lose this, then you're gonna have to start all over and you already made a video, so don't lose. No, I don't need that stress and that drama. Um, you know, I'll say this. Once I'm up to $1 million, then I will make a video, my path to 1 million or something. Maybe I'll start at 100K and then move from there. But no, after 4K, I'm not making any sort of videos because I don't know, I kind of let a couple of good runs go to my head and then it would mess up the rest of my trading. I don't know. Try not to fall for the same traps again. I say traps, I did it to myself, but I should have bought popcorn while I was out. I was literally at the store. Okay. Well, that's all we have. I will, when I get a printer, all of this is being written out. Mm, yeah. But I need to take better notes, like notes like this. Like maybe even just like copy this and stick it on the chart. Um, but I also like to have arrows and things so I can actually see what's going where. Okay, I need to go drink a bunch of water. So yeah, I will be I will be done for today. Yeah, I've been streaming for like an hour. Much too long.